Hello, boys and girls. What a crazy week, right? So, I'm doing this blind. I haven't checked the charts other than what I saw yesterday and the last couple of days. Just updated the Delta document and let's get right to it. So, I shorted around 405, I think, between 405 and 406 somewhere with June puts. This was the bullish scenario from last week. Might still happen. I'll get into it in a second. Also have to update this. So this was the weekly high that moved higher. We don't care about the old one, so actually I'll take out the weekly range and make the new last week's range this one. So let's change to weekly and oh no, that's March top. So March top also moves. We go to the monthly. Hide this thing. So the March top changed. Now we have to see what the 50% level is because we care about that one. And it's 395.17. Okay, and then back to the weekly. Uh, so the weekly range, I use this one for the current week, and last week's range is this one. So we move it here, here, and also need to check 50% for 170. Okay, and the quarter also ended, so I will make a new one. What color do we use for this one? Let's go with orange, an incandescent orange. And 398.07. Group this, Q1. Okay, that's about it. So back to the daily. So above average volume, but on the weekly it's low volume, or I wouldn't say low, but on the lower side. Monthly high volume, it was a huge monthly range, and the dip was bought. We opened the month, so on the monthly we didn't lose this trend line. This is interesting, but we didn't break out either. So on the monthly, it was a save, even though we went below it on the daily. Let's see, weekly. In the weekly, we went below it, but on the monthly, we saved it, and it's usually pretty important. Same on the quarterly, like this counts as a save, not a loss of the trend. Okay, so back to daily. First of all, let's talk macro. Um, so for a couple of weeks with the bank scare, we went from the inflation trade to the recession trade, and that caused yields and the market to inverse their correlation. Yields were going down, the market was going down. Yields were going up, the market was going up. This lasted I think 2 weeks, something like that. But now we're back in the inflation trade, and uh, yields are dropping, the market is going up. Pretty soon, if yields go up, the market will go down as well. And this is what I think will happen relatively soon. Another big element of this is oil. Oil had a heroic save as well on the quarterly. Remember, we have this 75 level, which is extremely important for oil, and we went below it on the daily, on the weekly as well. but on the monthly and on the 3 months, on the quarterly, we saved it as well. So this is now extremely bullish. There is whenever we have deviations outside of a range that and then it's saved, it usually starts a counter move to the top of the range or in the other direction, not necessarily the top. It can be at the bottom, like this. See here, deviation, and when the deviation is uh, rejected, doesn't matter if it's down or up, we tend to go down. We go up, deviation, we tend to go to the other end of the range. Deviation, it try to break out, we tend to go to the other end of the range. This one broke down, but whatever. Same here, like it tried to go above this range, and this is what the beginning of the range, so it doesn't matter that much. But even then, like it was forming above and below it. So uh, think of it as a broadening formation. The market doesn't know how to price an item, so it tries to go up and sees what happens. It gets rejected. Okay, we try to go up, it didn't work out. And what do we do now? Well, let's sell it because it didn't work out. And that causes it to go to the other end of the range. And it tries to break below that one. And goes below and it gets bought. Then what do they think? Oh, we tried to sell it as well. Might as well buy it because we tried to sell it off and it didn't work out. And now let's buy it. And then it goes to the other end of the range. And then maybe it breaks out there as well. Kind of the same situation here, like it tried to go up, it tried to go up again, made a lower high, it tried to go up again, made it an even lower high, and then what comes next? We go to the other end of the range. Then it tried to go down here, it tried to go down here as well more aggressively, and it was saved. The fact that it's saved here, it's incredibly bullish. um, and I have another analog, a daily comparison for you, which is what I think plays out next. So oil, before the breakout in 21, it was looking quite bad. Like we had this trend line going on for oil. I think might actually be able to do it like this as well or something. Yeah, let's say this works. Whatever. So we had this trend line going. Uh, it tested it the first time and made the trend line actually. Then it went up, kind of an exhaustive move. Then it dropped below it. It back tested, went down a bit more, made a higher low, and then it went crazy. And this is the type of move we can expect from a fake breakdown or breakout. Like deviation moves that don't actually cause a surge in the direction of the deviation, like an actual breakout, tend to be super create counter moves that are huge, just like this. So what I expect for oil to do is exactly this. So we go down again, we make an obvious higher low at 70, most likely 70. And then we go back here, we recapture, we do this small backtest of the trend line, you see here. So it's this, retest the trend line, and bam, go up. So inflation trade going back up, and I think oil will do this. Uh, Up to 100. One day at a time. Let's take it. But there are quite some obvious levels that we can already see. Let's uh, let's draw them out. And so first one would be this one. Let's make blue and 3. Uh, this is the first hurdle, and I think it will get to this relatively quickly. And might actually do this. So we go down, we go up, and this is our first actually pullback once we recapture the trend line, and then it just goes. Then we have this level here, 93, and then is this, like I can actually look at the So this is a hammer now on the monthly, a red one, but whatever, the lower wick is huge. And our first target is this. Basically, every top of the candle on the monthly is a target. And this is a machine gun pivot, what the people with the strat call it. So it takes this one out, then it only has a bit until here, a bit until here. So most likely we will get a deviation above it, and then have a pullback. Maybe even turn this one into support directly. Like we go up, go like this, then turn this into support directly. I don't know. We'll see. Then this is the target. Then this is the target, and this is the target. And most likely when we get here, because the target is higher, um, it will deviate above it if we get to this level. So on the longer term, this, then no man's land, then up to here. The tricky part about oil is the recession scare. So uh, if something else breaks, oil will get killed instantly, as well as commodities in general. But I don't think that will happen. Like the liquidity injection we had, plus things stabilizing, um, yeah, don't think we get it. But next week, I believe we'll get a pullback to 70. It's a buy. Then it will go back in, retest, then go crazy. Okay, then let's look at Qs. So Qs, this is the channel. I think this is a fake breakout, just like this. It's also at a level. Uh, I guess it can do like 329, but it's crazy that it can get that far. We have slightly rising volume, but the volume is bad. We look at mega caps as well. This this is a sell for me, and I'll show you guys the delta data in a few minutes, and why I think we cannot go higher from here in equities. In stuff like energy, we can, and industrials, which were beat up, maybe even banks. A few sectors will go up, which I think will keep the market from going down a lot. And why I think this is just a pullback, not a breakdown. But for Qs, we can expect like at least 20 MA retag, which is how much? Like 5% ish. 20 MA will go a bit higher, so between 4.5 to 5 percentage. Maybe it actually goes to the 50 MA, just to trap some bears. So yeah, this is kind of the limit where we can do like the mid channel here, and that's between 300 and 304. And this is not a breakdown in any way. This is like bullish. This is bull market action, not bear market action. Uh, okay, so first let's look at delta. So OI. This is OI for the April expiration. And as you can see, virtually no puts. This is for 414. So 415, sorry. So no puts at all above 414, 415. We are running out of fuel very quickly. Uh, the 420 calls are not that many, and without, like, if the level looks like this, like 400, with a lot of puts and a lot of calls, we can go through it no problem. But zero puts above 415, there is no way we go even to that level. I don't think we go through it. And this is the profile. Like we're running out of fuel. Almost all calls are in the money. Like look, almost the entire call OI is in the money. Sorry, this no, this one is almost all the entire put OI is out of the money. So there's not a lot to see sell off. And then we look at this is May. This is April plus May, and kind of the same situation. Like very low put OI, above 415. There's a bit more, but marginally more. So this will make it nearly impossible to go above 415. And the delta situation. And only when we get to June and include June do we get the a bit more put OI at these levels. Before that, there is literally no way we can do it. But this is what I like to see, and why I think we get maybe between May and June, not May, June, between April and May, we get a run up above 420 to put the top on this thing. But until then, I think it's very, very difficult. I will go all in on puts if we reach 420, and I'll show in the delta document a bit more. So delta charts. This is the difference between a lower and higher delta. As you can see, we're nearly at the bear market highs. Every rally we've had has stopped at this level in the bear market. Even if we go a bit higher, that higher is so above 410, we reach the same level. At 420, we are at max. Like we will be competing with this levels here. So 420 is a huge wall. I don't think we get it. If we get it, it's an easy short, no hesitation. Then this is VIX equivalent, like lower in the money put delta has cratered completely. In the money call delta has gone up, and we need to take 410, which is easy to do, but only briefly. Then we need to take 415 and then 420, and that's a tall order for it to happen, considering how low is in the money put delta. Like there are no puts in the money left, virtually no puts in the money left, and that's a no fuel situation. Okay, so higher delta over lower delta is almost analog for VIX. And what do we look like now? We look like this. What happens when we get this? It's a very steep descending wedge. So what comes when we get a huge descending wedge? We get a move up. So market should go down. Same situation here with lower delta over higher delta. This is an inverted VIX. It's going up. It's not going up a lot. Call OI is not going up that much, so we're still near the lows with call OI. And with the market as high as it is, like, are people going to buy a crazy amount of calls with price at 410, 420? I'm gonna argue that no, they are more likely to buy puts because people will buy puts and not calls. They will actually sell calls, buy puts. What will that do to the market? It will go down. It's relatively simple. Who is crazy enough to buy calls with the market nearing 420, let's say? And I mean for the long term, not the short term. Maybe short term, like 0DT stuff goes crazy and we go up in the short term. But uh, over the next 3 months, are you buying calls at 420 for, let's say, September? Most likely not. Okay. This is delta difference. So what percentage is lower delta and what percentage is higher delta? Again, you can see that we're near the highs of the range for the bull market, for the bear market. Started here and we're almost there. If we nudge above 410, it will go to around here, and then uh, it's we go to the max. Put to call OI is stabilizing, like until April expiration, this will not go down a lot. And because of what I explained with put to call OI, with puts and calls, with this, the reasoning that people will not be buying calls a lot because price is so high, and they will be buying puts because price is so high. This is most likely to go up again. And when it goes up, we will get a, a move up. This is a falling wedge as well. And it will go up, and that will cause the market to drop. The positioning stuff is now at almost exactly 50%. 50% is a big level, like support here, resistance here. This is an overshoot. This was the top of the market, overshoot, and it was a big one. Like we went for craziness. We may go for craziness as well here. Let me show you what the levels are. So with price at 409.76, which is the post-market price, let's see 410, 410.1. I'm adding 0.1 because I want to clear the limitation between in the money and out of the money. Like if I put 410 exactly, there will be both calls and puts in the money. So we go to 57-ish, 60-ish. If we go above 410, so it's like a 10% jump. Then 415.1. We go to 78. Let me actually show as well. So we go almost as high as the top last month, or when was it, in January? And then 420. We go to the max. So this is the max price deviation. Sorry, not this one. So we go here. This is an all-in short, no problem. And we can also see this. The lower high delta difference will make a new high. This will go to the minimum. This will go very high. And I wanted to check. This will go to a very, very large high, even above the August one. Delta diff will go for a cycle high, like similar to March, but this will be even higher because I am missing some OI. The OI that came on Friday, which I expect will be bullish, will actually make it look even steeper. Same with this, like we might get to 100 even before 420. So clear short, no question about it. We can even check to see when it's a buy if we go down. So let's say 384.9. I don't think we go low a lot, go down a lot. I'll show in a second. So this is a buy at, so above 384.9 is a clear buy. The lows of the market was here, I believe, and it closed 385, but I think pre-market was lower on March 13th. Here, oh yeah, March 13th. So let's look. It was here, and it closed 385, but it opened 380. So this was like 7% or something, and it was a clear buy, but I missed the buy there because daylight savings time. I bought around 385 or something. Um, okay, so this is a clear buy. Most likely the situation, if we actually get the price to this level, this will be even lower. What I expect we will get is at maximum 390. And I'm putting this just to be for 390p to be in the money. Okay, so back to normal. Okay, we hide this. We don't care about volume anymore. So this is quarterly Q1 high. So we're at resistance. What I think will happen on Monday is we go above 410 briefly. We get rejected, and then one thing at a time. So first of all, if we make a new high on Monday, which like I said, I expect, we have a potential for an engulfing candle on the weekly. Uh, Becoming an engulfing candle doesn't mean we close we close at the lows. It just means we go down. Like an engulfing candle can be we go up, we go here, 390, and then even in the same week we go up to here, and that would be much more bullish than bearish. So this is we care about these levels because it will either be a bounce here at 401, or we go most likely for the engulfing candle and we go for 390. Let's go to US 500. So I made this the thing that about the end of month turn, and I first started with the OPEX cycle, and then notice it's a monthly thing. So whenever we have a move at the end of the quarter in the whatever in the direction, the move starts mid around OPEX, and it usually tends to continue until the end of the quarter. And we have here, and then we get a reversal in the other direction. We have December of 2021, then we have March. It started around the OPEX and then went to the top, then we got a reversal. This went up, we got a reversal. This went down, we got a reversal. This went down, we got a reversal. And now we started on the 13th, sorry, which is still in the, it was in OPEX week. We got as high as this. Now it's time for a reversal. What I'm looking to see is something like October or June. And I think most likely similar to June, in that October made a lower high, or let's call it equal high for the close, a lower high on the intraday, a lower low, sorry, lower low. And on June, we made a higher low. And because the overall situation is somewhat bullish, I think it's more likely that we make a higher low. What was the low for us? It was 380. So the target becomes this 390 thing here. These are wrong. I'll go back to SPY. So because I expect we see this and a higher low, I think 390 is our target. Like this area here. Maybe a bit higher, like this, like this. So 390 is our big level. If you remember from my old post or videos, 390 is kind of our, we have this $20 ranges. 390 to 410 is one, and we actually had a bounce to 390, and we are at 410. Oh my God, what what a coincidence. Then above 410, this was an overshoot that didn't get to 430, so it's 410 to 430, and I think we will get to 430, but a bit later. Uh, what what do we do if we deviate a bit again and we get rejected? Like I said at the beginning of the video when discussing oil, a deviation that cannot uh, break out will usually go to the other end of the range, which is 390. So given this, the most likely outcome I see for next week is an engulfing red candle. Uh, that might move higher towards the end of the week, but for now that's enough. So that what would that be? It will be a 200 MA bounce. I think we get a pullback no matter what. The question is on here. So we go up, we go down. If we cross the 50% level for last week, let's hide this. Uh, then we will go for the engulfing candle. So the two scenarios are we go up, we go down. Maybe we overshoot a bit below the 50%. Almost for sure we'll go below it slightly, even if we bounce off it. And we either bounce here and then it's bullish, and we go for 420 by OPEX, and then we have a big drop. Or the other scenario is we actually don't hold here, we turn this into a resistance, and we will go for the engulfing and probably towards 390. And then we bounce, we continue to be bullish. The most the bullish that is actually not as crazy. This is the type of bullish that is sustainable. The type of bullish that we're seeing here, like this is not sustainable, and it's a short every single time. The slow bullish is sustainable. This is the type of bullish I want to see, and that's it. Uh, but given the quarterly effect, like we had a run up, now we should see a pullback. I think we make a higher low. The higher low is likely to be around 390, and that lines up with making an engulfing candle here. This could be like I draw it out over a long period of time, but it's actually it can be very quick. Like we go down, we go here, and we close here, and all in the single weekly candle. This won't take a lot. This will be just next week, and next week is here. So by here we're already at the midpoint. Okay. Yeah, I think that's it. Some other things that suggest this is VIX has dropped quite a lot. VVIX, that rally at the end of the day or yesterday was on VIX going up and VVIX going up, which makes it, which um, I don't know, triggered my danger signals. Uh, I did not double down. I wanted to. Most likely, I will double down on Monday if we push higher, and the rest will be at 420. I'm not adding anymore. Maybe 415 and then 420 if it actually continues going up. But I highly doubt that. I think we see a pullback here. And another thing to take note is what kind of candles do we see on the daily. If we see like 1.5% red candles, that's completely fine. Uh, and it points towards this. Like, what do we have here? 1%, then 2.79. This was kind of scary, and then 0.76. This 2.79 one is pretty scary, and it ended up making new lows on the later on. So that was a scary candle. But for June, we had minus 0.48, minus 2%, minus 0.8, and then minus 0.81. If we see this kind of relatively small candles, like a maximum of 2%, we don't want to see more than 2% in a single day, then the higher low scenario will play out. If we see this kind of scary candle like 2.5 plus, it means we will probably overshoot. So if we see like a 2.53% candle, a red candle next week, that's a very big danger signal. It doesn't mean we go crazy down like 360 or something, but it's possible that we retest 380. So small candles, its target is 390. Uh, Big candle target is 380. Both are a buy. Like you use your uh, decision-making skills and choose what you do with that info. After that, I'm bullish. Like I think we keep going up. We grind to 430 in the end, but I want to see it happen slowly. There is no reason to have this kind of rallies anymore. If it's a bull market like people are hinting, which it is not, but bull markets don't have this kind of big moves up all the time. Like, let's go back to what? Let's take 216. And it was like surges happen after consolidation. Like we had this period in which nothing happened, and it was like moving up and down in a 2.6% range, then a big surge, and then it went up. How much? 5%. Then another period of consolidation in a small range. So this, and we make it here. Then it moved up and down in 3.6% for a couple of months, even. Then it broke out, it moved for 3.6 to 5.8, so like 1.5%. This is the kind of move we usually see in a bull market. Like it doesn't the bull market is defined by not going down, not by going up like crazy. These are blow off moves. Blow off moves are always a short. So if this is a bull market because of liquidity injection, we need to slow the fuck down and and do something like this. And then maybe we get a surge up to 430, we consolidate a bit around here, then another surge up and stuff like that. This is how it should work, not this constant zigzagging. And the only reason why it happened like this is because the mean reverts were huge. Like we went from 480 to 420. What is this? This is 420 here. 420. So 60 point drop. The mean reversion is the midpoint. So 30 points up. Did we go 30 points up? Up to 460. Yes, we did. We even overshot a bit. Then we went from 460 to 4010. And then another mean revert between 480 and 410 is, I don't know, 45. So we went up again. Then we dropped again. We went up again, dropped again, went up again. The bigger the drop or the move up, the bigger the counter swing. And we are done with this period for now. Like the swings are smaller and smaller and will become smaller and smaller. This is the definition of consolidation before a breakout, a directional breakout. So what we should be seeing is actually the range getting smaller, 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 and maybe eventually we get a breakout that takes us to 4,300. And we can even see like the potential trend line. So this is a trend line, let's say, and the other one might be this, like this. And what we should be seeing is more of this for a month, another month or so, and then breakout post February OPEX. If it goes up, it could also go down and make us new lows. Depends on what happens in real life. Same last thing, yields, overshoot, overshoot, move to the other side of the range, overshoot, move to the lower side of the range, overshoot. Now we should be going back to 4%. There will be no cuts this year unless something breaks. So another test here, and then it goes up. Because we are back in the inflation trade, the market should go down in this scenario. Yeah, I think this is it. What else can we look at? RSP equal weight SPX. It went up a bit. The ratio went up a bit, but not by a lot. Looks like this is becoming resistance. Mega caps looks like shit. Like Tesla is okay-ish, but it doesn't have a lot of room either. And this looks more like hitting resistance, retesting. I will not call this a breakout. I'm gonna take this one out. Retest might overshoot a bit, but then it will go to the bottom of the, not the bottom, not this, but to the other side of the range, which is this. Apple nearly at trend line. This is a demand, a supply zone. Like there is no fucking way this doesn't drop. Like it went up 32%. Um, where is the 20 MA? It's here. I would like to see a 50 MA tag. For now, it could do 155-ish and then go back here again and then drop. We'll see. But it needs to at least retest this level. Nvidia, same situation. It had like a absurd quarter. 90% for the quarter for Nvidia. Holy fuck shit. RSI is all over the place. Like this is not a good look on the 3-month RSI. Like the divergence is colossal. And I've seen this before, obviously. For other stuff, it's not good. I cannot find an example right now because I don't know it by heart, but this is not a good look. Google is the most beat down of the tech names, I think, of the big tech names. And most likely it will retest 95 and then go up. Google should drop the least from all of them. Microsoft into resistance. This is the supply zone to 90. It has to go back down. This will count as a deviation. Amazon is also beat down, but it's the most overvalued one. Facebook huge rally, might go to 220, then correction. Netflix, whatever. It's time for a correction. Don't get too carried away with the bullish case. And even if we keep going up, 420 is like a knock it out of the ballpark short. Okay, that's it. Hope you guys liked it. Have a good weekend and good luck for next week. Bye.